You're listening to the greatest multifamily investment advice show. My name is Adam Ras, and now I'm talking everything multifamily for an in-depth conversation, and I will be diving deep into raising capital, deals, and underwriting process. Welcome back to the greatest multifamily advice show. Today we have Tate Siemer, real estate investor, syndicator with more than 4 years on syndication in Midwest US. Please help me to welcome our guest today. How are you, Tate?
I'm fantastic, Adam. Thank you so much for having me. It's great to be here.
I appreciate you taking the time today. And before we go on the syndication and the fun stuff about your market, can we talk about a little bit what was the beginning for you, especially to jump from regular single family to syndication?
Sure. It kind of happened by accident, actually. We were in single family for 7 years before syndication, and we were just really hitting a wall with not being able to grow and scale the way that we wanted to with single family. And
Mm,
we were encountering all the typical frustrations that single family investors have.
mm,
And so we were looking for other avenues and other investment vehicles, and we got into some land deals and did some bought some land and entitled the land, and then we'd sell it off to builders and developers. We actually built some new townhomes ourselves, some spec townhomes, and those did not go well. That's kind of another episode, I think. But
mm,
um, in the meantime, doing those projects, we had a colleague, a wholesaler, that brought us a 12-unit apartment building in South Salt Lake City,
mm,
and it was really poised for a full remodel, full repositioning in the market. And we were able to almost double the rents that were there in the course of a year by remodeling from head to toe. And that project went really, really well, and it was very eye-opening to us, how how much more juice there was in multifamily uh, in one deal than there is in single family, by a long shot. So we've been nothing but apartment focused ever since, and we've since acquired almost 600 units, 595 units in the Columbus, Ohio market and the Oklahoma City market. And we're under contract on another deal in Oklahoma right now, working on a couple deals in Columbus. So yeah, we love those markets, and we love what we do.
Regarding working now, and this is really another subject, is working now is where is the interest rate is on the move anyway. And we just said before the show that we have two interesting next interest hikes by the Feds on February 1st and March 21st. How you see like now the market when you're dealing with the loan part when is from like after closing and you have I'm sorry, after getting the deal under contract and you have the deal in the move on the next 3 months to close. How you see the market going on now, especially with the raising of the cap rate and the spread has really become tough between the cap rate and interest rate.
Yeah, I gotta say, Adam, I don't know. I don't know how it's all gonna go. To be totally authentic about it, we're all at the mercy of the Fed and
Mm,
what they decide to do. Um, as you guys all know, the Fed is increasing interest rates to combat inflation, and inflation is still present.
yes.
And so a lot of people think that they're going to have to keep raising interest rates. And so that could be a reality that we're dealing with. I think what is most important to focus on right now, if you're a multifamily investor, is buying properties that currently cash flow in place with either new debt at existing interest rates, 6.5, 7%, or with assuming a loan that currently is on the property from the current owners, or having the current owners carry a note on the property. I
Mm.
think you have to do one of those three scenarios uh, right now to make deals work. And if you're getting conventional lending, I think having fixed rate or you know, a reasonable floating rate with a cap um, over the next 5 years or so is key, because if you have a fixed rate loan and you have cash flow, you're solvent, you have positive cash flow, then you should be able to withstand whatever economic downturn we go into or are going into or are currently in. So that's what we're focused on. That's what I talk about on my podcast a lot. That's what I coach my students on is those are the kind of properties, those are the kind of deals we need to find.
I think you're right about this. Like right now, the actual move is to have a lower LTV, and but this is gonna bring another subject, which is coming to raising more equity to have a more
Right.
like fixed fee. How you see the market is adapting with this approach, especially that you're gonna rely on two parts here, is private equity firms with bigger checks or raising more capital with syndicate with accredited investors or qualified investor. How you see the market adapting on from this perspective? Do you see an actual appetite to investors to invest more in your market?
I do. I think being in the right market is key. I think you know, Columbus in particular is a market that a lot of investors really want to be in. And our job as capital raisers is to tell the story of recession resistance.
Hmm.
And that's really important. Like we need to be very fluent in this conversation about why our asset class is so daggone special
Hmm.
and why people want to invest their capital, especially now, especially in these circumstances, especially with inflation, uh, because investing in cash flowing real estate is a hedge against inflation. And that's a very important phrase to have in your tool belt. It's one that I use a lot. Hedge against inflation, recession resistance.
Hmm.
Those are two concepts that we need to be like evangelical about getting out there and preaching, so to speak, because that's what's so. And it's really, look, if you look at this not from a perspective of I'm asking people for money, but I'm offering opportunities,
Hmm.
and you look at your job as to educate people about these opportunities and not ask for money. Like, first of all, you're taking all the pressure off yourself to go out and like be a salesman and pitch your deal. And
Hmm.
second of all, you're going to get a lot better results because you're not coming at people from a salesy context. So I think that's just super important to keep that message in mind that you have something to offer that is so unique and so special and such a great alternative to the stock market, that you need to get it out there. You need to let people know what you're doing.
Agree on this. Another subject you mentioned is the Midwest. In the show, we love the Midwest versus the South states like Texas and Florida. And I would like you to speak about what was the current situation right now with the market fundamentals, where I see a lot of like potential or actual market strong market fundamentals in the South, but also I see the same strong market fundamentals on the Midwest. Can you speak about especially Colorado and Oklahoma?
You mean Ohio and Oklahoma?
Yeah.
Yeah, yeah. Um, yeah, I mean, Ohio, we loved Columbus 3 years ago when we were really like exploring different markets. We love it from a economic diversity standpoint and an economic and cultural vibrance
Mm,
standpoint, also a cost of living
mm,
standpoint as well, ease of living, and people's satisfaction, like life satisfaction there. People really love to live in Columbus. Um, it's a city, it's a market, in my opinion, that's kind of the perfect example of a hybrid market, meaning that it produces cash flow because it's affordable,
mm,
but it also is growing and appreciating. So, and then last year, Intel announced their plans for their $20 billion factory, their microchip factory that they're building on the northeast side of Columbus.
mm,
That's going to produce 10,000 jobs. And that's only phase one. They're talking about 5 phases of this project over the next 10 years or so. 12 other tech companies have announced that they're moving there as a result of the Intel announcement.
mm,
So we're really excited about what's going on in Columbus. It's becoming a tech center, as well as a cultural center, educational center. The third largest college in the country is there, Ohio State University, and it's a state capital.
mm,
So we love all that. Oklahoma City is also a state capital, and when you have that state government infrastructure, you do have a good economic driver there.
mm,
It's also very economically and employment diverse, meaning that there's lots of different sectors and industries there that thrive. A lot of people think that Oklahoma City is all about gas and oil, and in fact, gas and oil is only about 7 or 8% of Oklahoma City's total economy. So
mm.
you've got a very diversified economy. You've got a growing population, and you've got affordability, and you've got a lot of inventory. So, I've heard it mentioned recently that these Midwest markets, the Cincinnatis, the Indianapolises, the Louisvilles, St. Louis, Kansas Cities, those markets are really like the last bastions of affordability in this country. And I think that's really true. You mentioned, Adam, that you like the Midwest markets better than the Southern markets, and we do too, because we can make deals pencil so much easier in the Midwest markets than we can in, say, Austin, Texas, or Dallas, Texas, or Houston, or Charlotte, or some of the Southeast markets, Florida. I'm not saying there's not deals there, or that I'm not saying that, there are deals to be had in those markets. A lot of times though, it's just different economics. And
Agree. Uh,
yeah,
yeah, what I like about the Midwest, as I mentioned, is there is still, as you mentioned, cash flow, which is another way, the enough spread between the cap rate and the interest rate, which is potentially having a positive cash flow in your deals. We are basically focusing only on, like, our team is only focusing on Kansas and St. Louis, like you guys in Midwest. That's why I love about the Midwest. The competition is less, the
yep,
fundamental is strong still, and the cash flow and the spread is there. So I agree on your point on this part.
yeah, yeah.
Uh, Regarding your sweet spot about asset classes, so right now after 4 years, is there any like actual progression on moving from class to class, or you found that you like a sweet spot like on B or C class?
Yeah, we started in C class, and value add. Sometimes we were buying C minus properties, and we have kind of moved up. We actually bought an A class property last year, brand new build. The one asset class that we're looking at more and more is new build
Hmm.
construction. Um, and you can, in a lot of cases, like in Austin, for instance, you can build for less than what you can buy existing for, which is kind of crazy, but it's true. And in Columbus, there really is a lack of available housing. There's a shortage. There's also a lack of available land. So new construction is kind of a commodity,
Mm,
um, and so you look for those opportunities, and we're at the point where we do have strategic partnerships with people that could build and could help us with those projects. Um, so we're starting to look more and more at projects where we might build new. I just wrote a letter of intent on a deal that has an existing 14 unit building on the property, and then there's room to build 24 new units with permitted architectural plans to do so. Um, so we're we very well may do that deal actually. So that's really we definitely I'm definitely somebody that believes in mastering one lane in this business,
mm,
and we definitely want to stay in the multifamily lane. We're not if somebody brought me a great storage center deal, I would probably not even really look at it too hard, because I I want to stay in the lane that we know the best and that we're less likely to make mistakes inside of.
I think about the mass the asset class. What I like about your approach is it's achievable on your market, the Midwest, because one of the risks of the Class A is affordability in markets like Austin when there's an actual recession or potential issue with unemployment. The Class A is going to be a risk, but even during recession, I think it's on Midwest, the Class A is performing well because of the affordability, as you mentioned on the beginning. But still,
Mm-hmm.
all of the Midwest considers that the last resort for affordability on the states. So
Mm-hmm.
that's what I like about investing in Class A, especially on the Midwest, which I agree with. Again, both of us has almost the same strategy on dealing with Class A and Class B.
Yeah.
Regarding another subject is building. When you started working on multifamily syndication, and this is a team sport when you have to build your brand, uh, having newsletters, raising capital, working with lenders, networking. I think all of this was for many of the syndicator was based on also a mentorship or a guideline or some sort of technical perspective help you to formalize your syndication team. So who was an information mentor on the last 5 6 years on syndication and real estate multifamily?
Yeah. Right after we got that 12 unit building that I told you about, I enrolled in Corey Peterson's mentorship program. It was actually a coaching mastermind setup, which was really cool. There were like 15 of us in this group,
Hmm.
and we met 3 times a year, and we'd meet for 2 days, and we would mastermind each person's business,
Hmm.
and we would take turns, and everybody would be on the hot seat for an hour. We also had calls. We also had one-on-one days with Corey, and he helped me put together our team. Initially, Corey was part of our team. Uh, we actually didn't ever do any deals with him, but he was part of our credibility kit,
Hmm.
which was great. And that gave us a lot of confidence to go out and start talking to brokers and looking for deals and creating deal flow and making offers. Was having that mentor in our corner. We didn't need him for very long. It didn't take us very long to kind of get our own wings, so to speak, and kind of figure out how to do it ourselves. But man, the the power of coaching and the power of mentorship just can't be understated. And really, to me, like, ultimately, a good coach is going to accelerate your timeline
Mm.
immensely. It's going to take a 2 to 3 year timeline and condense it down to 6 months or a year. And that's what a good coach can do for you. So
I agree.
I I love the coaching format. I'm a coach myself. I offer one-on-one coaching specifically for apartment syndicators, apartment investors, and love doing that. I love being a part of somebody's success, and I love being in that role of making sure that nothing's being missed, that no important mistakes are being made, that I'm seeing all the nuances. It's kind of like, like the boxing coach in the corner that watches the match, watches the fight from the corner and can see everything, right? And has that high level perspective and is always right there with you every step of the way. That's what I see a really great one-on-one coach providing.
I agree on this because, as you mentioned, as a team sport and looking for credibility, especially on the beginning, on the deals, especially as a starter, you're gonna write your letter of intent. You need an actual credibility and team to support you with the brokers and real estate brokers. So I agree on this point. It expedites the process, as you mentioned. In 6 7 months, you can have your first big deal on commercial real estate. Before we conclude, I would like to ask you about a question. I like to ask all of my guests about it. How you describe your superpower and strengths after 4 years on all of this interesting journey? How you see your superpower?
Yeah, I see myself as a visionary. And by that, what I mean is that I can see the big picture almost all the time. It's like controlling the ship, the course of the ship from the captain's quarters. And I think that I'm really good at bringing people together, at enrolling people in exciting possibilities and opportunities
Mm.
through communication. And so I think just kind of, my strength is driving a company from the front, driving our brand from the front. And then, in the thought leadership world, like my podcast it's 3 years old. We have 180 episodes out. I think, you know, that being an influencer and an educator is something that is very important to me, and I try every day to be better and better at that. And then, being the absolute best coach that I can be is so important to me as well.
I appreciate it, Tate, for your time today. And before we conclude, I would like to ask you how the people can follow your success and reach out.
Sure. Yeah. So follow me on social media. It's Tate Siemer, Siemer. First name is Tate, Tate. LinkedIn, Instagram, and Facebook. And then really the best thing to do when you're listening to these podcasts is take some action right after the podcast. One thing you could do is go to my website, investwithgreenlight.com. There is a downloadable ebook on becoming financially independent and retiring early. And there's also a link to my Calendly link. And the action that you really want to take is going there and booking an appointment to consult with me for 10-15 minutes, no strings attached. We can brainstorm your business and talk about next steps to get you kind of to the next level, if you will. And I just love doing that. There's no agenda. I'm not trying to sell you anything. I just want to help. So if you really want to take some big action today, listening to these podcasts is wonderful. There's nothing that takes the place of education, but you got to take action. And
Being a doer is a main part of this business, basically.
Yeah. Yeah. And guess what? Almost everything happens in conversations between you and somebody else. So if you want to look at like where the action is, it's usually in picking up the phone and calling someone, or making an appointment on their Calendly or Zoom meeting with somebody, or having coffee, or going to a conference and meeting a dozen people. Like that's where it happens. That's where business gets done.
That's basically it. As we mentioned before, multifamily syndication is one of the uh, best investment in the country, and it's based on a team sport. So I agree with you. This is basically is the action you have to do is to be a doer and doing more networking with investors, passive or active.
Yep.
Again, thanks a lot for being with us today, and we're really happy to bring you again to talk about more the land development part and what's happened basically on these deals.
Yep.
And again, I appreciate your time.
Yes. Thank you so much, Adam. This was a great time. I really enjoyed it.
Thanks a lot.